Good evening, everybody. Welcome to the third session of these round of presentations, which began with dissemination of the crude oil markets, and then we went through the natural gas markets. Many thanks in advance, of course, to the Georgetown Capital, who was able to put together these sessions for our many clients and students and people from multiple diverse backgrounds who are actually interested to know more a little bit about the commodity market, in particular crude natural gas, and now this third session with refined products. So we began all these sessions talking about the crude oil market, where we understood the very basics of the crude market. What was crude market? Which sector did it belong to? Upstream, midstream, downstream. But initially, we realized that we were talking purely from a physical commodity point of view. So the crude oil market, we went over the upstream sector, the exploration and production, being a very physical commodity. How do we actually dig the very first crude, a portion of crude or volumes of crude, if you would want to put that way, how to conduct a market analysis on the crude oil markets, the crude supply and crude demand. We spoke about the seasonality affecting all those affecting crude. We spoke about the OPEC, the main body that is responsible for regulating the price of crude oil to ensure that there's enough supply to meet demand. We then moved on to the natural gas, which shares a similarity with crude in a way that both are very physical commodities, but the way that they are characterized in terms of how you find them in a reservoir, you can pretty much deduce that the natural gas, as the name suggests, will be in gaseous or condensate form in a reservoir. We define a reservoir as a space which contains porosity, i.e. pockets of space to allow crude and natural gas to be stored, and permeability, the flow of the, if you want, the routes, the connections that allow crude to flow through from these ports to the surface, or to those to drilling pipes, if you want to put it that way, that we put it in the ground, and is going to suck all the crude and all the natural gas and allow it to flow to the surface, where it's allowed to be treated. So now this is the treatment, the third phase that we want to call it. Third phase, or more specifically within the oil and gas industry, we call the oil refining industry, the downstream, the refinery sector. So just to break down a little bit more in terms of sector. So of course you have the upstream, which is exploration and production, which will involve those stages of exploration and production is basically from the very first moment that you conduct your seismic activities. You throw the geophones or the geophones by the seabed, or and the way that you do that is by reading the seismic activity that you get, and it allows you to locate the pockets of space that you have in the surface below. That's the very first stage. So that's the seismic, and then once you do the seismic, you're going to do the well appraisal. You do the well appraisal, it means that you're going to quantify the volumes that are potentially there to be produced, or the probable volumes that are there to be produced. You start developing, you start producing, and at the end, when the pressure is no longer enough, all the reservoir needs to have the driving mechanism, then you abandon. Before you abandon, of course, you might have the secondary and tertiary ways of recovering. That is all related, that is crude, that is all related to the crude oil market. That was the upstream. Now moving on to the midstream, really, that's midstream. What is it? That's all about transportation, that's all about trading. Within transportation, you need to decide whether you're going to go via pipelines, or whether you're going to go with shipping. Shipping, we saw a lot more shipping when we spoke about LNG on the gas, because there was that's a major player or major factor that you need to consider when talking about gas. Pipelines are very physical assets that include or involve a lot of geopolitics. Think of Russia, Germany, for example, the Nord Stream pipeline that is connecting, that it goes from Russia all the way through Germany. There is a lot of geopolitics, a lot of sanctions in play, but that's the whole purpose of deciding whether we're going to go with pipelines or whether we're going to go with shipping via LNG and so on. And what is the downstream sector? The downstream sector is where you actually find the refining, which is the topic that we are going to cover today. For us to start off with, we need to understand what we actually talking about in terms of refinery operations. What do oil refineries do? What is it that relates to refinery, and why is that so important? Now, oil refineries, what do? Simple. They convert crude into marketable products, and those we call fractions. When you hear in the market fractions of crude, that's precisely what we are talking about. We're talking about those marketable products that which were applied a lot of pressure and a lot of temperature upon, and they segregated or they broke. They created small fractions with different under different conditions of pressure and temperature. If you want to fully understand refinery operations, one thing that you need to bear in mind is that this is a very technical, a very physical and chemical process. This is a very industrial process for you to obtain those fractions of crude. And as you can imagine, of course, depending, we need to keep referring back to the session that we had on the crude oil markets, because as you will see on point number 2, you will see that we have a big bracket saying that the specs or the fractions will depend on the type of crude, the grade of crude. So that's what basically refineries do. Okay, think of it as a set of big industrial infrastructures which will break down that crude into usable fractions by applying a number of physical and chemical processes. The yield and quality of these fractions, as I mentioned, will depend on the type of crude. And further ahead in this presentation, we will see that a couple of grades of crude and what they are best for specifically. Okay, so on the picture, or on the picture to the right, you're going to see this expression that we call feedstock. Feedstock, as the name suggests, is basically what you feed the refinery with, and which part actually goes to. And you can see that everywhere that we have P is a physical process, and everywhere that we have a T, it's a thermal process where you apply a lot of temperature or higher temperature, and the physical where you apply a lot more pressure. And the C will refer to all the catalytic processes, all the conversion processes that you need in terms of treatment or to further break down those initial fractions. So this is actually very important, and I want to spend some time just explaining what we have here and how we kind of break down this section of the refinery operation. So everything starts with we have this process called the salting, and the salting is basically the removal of salt for crude oil. You might not think that crude oil contains salt. Who would think that crude oil contains salt, right? Who would think that crude oil contains metal? Maybe you're familiar with the fact that crude oil might contain sulfur. All those three, those are poisonous, those are toxic to the crude quality, and that's why the very first step before you load it into the atmospheric distillation tower or the CDU, crude distillation unit, as it is equally called, you need to desalt it, because with the physical process, if you don't desalt, it's going to be very, very hard. It's going to require higher pressures, and the yield and the quality of the fraction that you're obtaining will be heavily affected by the salt. Whereas when it comes to sulfur and demethylation, you can do throughout the whole process pretty much, and we're going to see that further down in this diagram. So you load or you feed your atmospheric distillation tower, your CDU crude distillation unit, with crude oil. Step number one, you desalt it. That's a big the atmospheric distillation. It's a big, think of it as a big furnace where temperatures are super high. You load your crude, and because of different temperatures, different pressure, you can see that the very first crude fractions that will come out of the top due to these extreme high temperatures and extreme pressures applied to it will be the gas fractions. Now, crude in the reservoir, they are in a reservoir, you will find the crude oil, you will find water, and you will find gas. So of course these are processed, and these are separated in such a way that the water is gone, or is pulled, recovered towards a water treatment facility, and the crude though can be mixed with the gas, or crude can be mixed with water. And that is exactly why at the very top you have the gas separation that ensures that all the gas all the gas that is mixed with crude is properly separated. There are a lot of chemical processes that are involved, and some of them you can see that you have the polymerization, which is a conversion process that is required to obtain the LPG, liquefied petroleum gas. Liquefied petroleum gas is being used in rural areas, for example, for cooking. And that's a cheaper alternative to natural gas, which a lot of people in rural areas might not have access to, or in general they just have a much better and closer source of LPG that allows them to use it for as a cooking gas instead of the usual natural gas. So that is the very first fraction. The light fractions will come out at the very top. Then you will start having grades of naphtha. And even so, you have the thing that you need to remember, guys, is that, crude, we tend to say that crude, fine, is crude. You know that crude is crude because it has its own properties. Gas, fine, it's gas. And the way, and you might tell me, okay, Antonio, that we know that, crude is crude and gas is gas. But what about refined products? When it comes to refined products, the granularity, as we are going to see further ahead in the presentation, is of extreme importance, because within gas you have NGLs, you have non gas liquids, you have LPG, you have LNG, you have a whole lot of granularity in terms of grades of all these products. With naphtha, you have light naphtha and heavy naphtha. Within those, you have SR. SR stands for straight run. That straight run naphtha, as you can imagine, is the very first naphtha that comes out of the as soon as the fractions of crude are distilled after the gas, of course. And the heavy naphtha is the heavier part of or is the heavier fraction that comes due to requirements regarding the higher pressure and higher temperature. They need to undergo multiple conversion processes, and you can see that they differ for different fractions. When we're talking about a light naphtha, that is going to require require catalytic reforming, for example, or the heavy naphtha is going to require a hydro treatment. And hydro treatment in this case is not related to water. It's very easy to make this mistake of hydrotreatment is a treatment with water. No, it's a treatment with hydrogen. You add hydrogen to further break down that heavy, and then you push it through catalytic reforming. Reforming, as the name suggests, you're going to have a reformat. Reformat, it's it's a light fraction that comes from, now you can actually follow the node of reformat, but is used towards the production of gasoline. So gasoline is actually the most desirable product out of all these three that we are looking into. And gasoline, of course, is used as a automotive fuel, right? That's why you feed your vehicles, your cars with, your motorcycles with, and so on. And it needs to have some sort of specification, but more on the specs we'll see in the next slide. So sweetening and blending. Sweetening refers to gasoline production through the naphtha treatment. Sweetening and blending, and you can see in the red box where you have a big T, which is thermal process. All these processes, what they refer to when it comes to sweetening is removal of sulfur and removal of metals. Metals is more of a towards HDS, or HDM, hydrodemetallation. HDS is hydrodesulfurization. So that's what sweetening and blending refers to. So you need to blend multiple components, which we call blending components, to ensure that you meet gasoline specifications. So after that, after the light naphtha, the heavy naphtha, you have the kerosene. Kerosene and jet fuel, they belong to the same family, as you're going to see, but different grouping, different products. Kerosene and jet is used as an aviation fuel, and that's the end product. And you can see that kerosene is kind of the heavier fraction that is produced straight away, and then for you to produce the jet or even kero with certain or lighter specification, it needs to go again through those blending and sweetening of those light middle distillates, and that goes through hydrodesulfurization or HDS and catalytic hydrocracking. So all these cracking processes, as the name suggests, cracking, it means that you want to further break down, you want to crack. This C stands for conversion process, and there are multiple conversion processes. After kero, you have gas oil. Both kerosene, jet, gas oil, diesel, they belong to the same family of middle distillates. They middle distillates because, as the name suggests, they are produced right in the middle or in between processes. Not the lightest, not the heaviest, but right in the middle. And what do we have as a physical process after the atmospheric distillation? After that physical process within the atmospheric distillation, just going to go back, we actually have, I'm going to put, let me put my laser. So these are the physical process. We have the vacuum distillation. So what goes into vacuum or under vacuum conditions are all the vacuum distillates, i.e. the heavier fractions which were not able to be broken down initially under the initial conditions of pressure and temperature. So they are thrown to a vacuum distillation unit, also called VDU. And you can see that you have a catalytic cracking unit. Your VDU, when you start going towards a VDU, you're talking about a more complex type of refinery. More complex type of refinery will have more complex units. A VDU is a complex unit, which requires a higher capital investment for you to purchase that unit. And then we start seeing things like solvent deasphalting. Deasphalting, it will produce asphalt, and the very at the very end process, or the very end product, will be lubricant, greases, waxes, and asphalt itself. Coking, it's a very important thermal stage because the coke, as you can see, easy to follow, is going to go through a series of thermal physical processes, and at the end you treat it. You further break down with hydrogen to produce greases, waxes, and lubricants. it's very easy to follow these tree of distillation, further distillation, and refinery operations. But I would suggest you do on your own time a little bit more digging if you're really interested to know where the end products are used, and a little bit more about these physical, thermal, and the conversion or catalytic processes. But that's what we, in the next slide, I show you a quick summary of the processes. So we have the physical processes, we have the chemical, and we have the treating. And these are all the steps. So within a refinery, you're going to have the physical separation and the chemical separation, and that can be further broken down into within the C that we saw in the previous slide, which is the conversion or through the catalytic processes, catalytic and thermal processes. So what does it entail when it comes to separation? What are the units? Atmospheric distillation unit, or CD, also known aka as CDU, crude distillation unit, and complex refineries will start having a vacuum distillation unit, aka VDU, where you start breaking down those heavy molecules which were not broken down through the initial processes. The chemical conversion, catalytic cracking, vis breaking, thermal cracking, coking due to the production of coke, and coke is a product that is used after undergoing further thermal processes, is going to be used for fuel oils and lubricants, greases, and waxes. So hydrocracking, use of hydrogen to further crack molecules, heavier molecules, um, such as we see, for example, hydrocracking when we're talking about middle distillates, or when we talking about for instance, all these physical processes in terms of dewaxing. For you to produce waxes, you need to dewax through hydro treatment, and this is a process that you carry on. Restructuring of molecules, reforming, also known as platforming, alkylation, and isomerization. Re, uh, all these restructuring is really happening where? Is happening at the very top. Alkylation, for you to produce alkylate. Alkylate is a blending component for gasoline, likewise for reformation or reforming or platforming, which is a process that you use also for the gasoline. So you start having a feeling that all these blending components, they actually, as the name suggests, they're being used as a blender or a blending product towards to meet and then a much bigger or much usable end product. But they also have their own particular market. I know that, for instance, a refinery in Turkey, in Turkey will produce a lot of reformat, and that is going to be shipped to US Pad 1. They use US and they use reformat for them to blend with already produced locally produced gasoline, and that is going to meet road specifications. Why? Because of CO2 emissions, to carbon emissions from CO2 production. Basically, that's how they use blending components. Likewise for treatment, contaminant removal, hydro treatment, hydro desulfurization, HDS. You also have HDM, hydrodemetallation, hydrodesulfurization, hydrodemetallation, and don't forget the desalting, which you do at the very beginning. You also have deasphalting. You have all these multiple processes. This breaking is just a process that you actually use to further break down the viscosity. And as you know, viscosity, a viscous fluid, you can imagine that heavier fractions will be more viscous. Viscosity is related to how easy a fluid it is to move. If it offers a certain resistance for it to flow, then it's a very viscous. If not, then it's less viscous. Heavy crude oil is very viscous. Water, it's not. Just to break down a little bit further on these processes, because we saw a couple: catalytic cracking, hydrocracking, coking, thermocracking, and vis breaking. This is a very good slide, and on the far right, I have a couple of crude grades, and the most feasible ones are the most well-known benchmarks. I know that Guyana, one of the benchmarks that you use, or the main benchmark that you actually use to price your crude, is the Brent crude, which two-thirds of the world crude is actually benchmarked against Brent. Then you have the WTI, and then obviously you have the Dubai from Dubai Mercantile Exchange, and a lot of Middle Eastern crudes are benchmarked against Dubai, but equally against Brent. So, what does it actually entail when we talk about the catalytic cracking? Typical feed. What do you feed into a catalytic cracking unit? Remember, if you're going to crack using a catalytic cracker, remember that what you're trying to do is to break a heavier fraction of crude. VGO, vacuum gas oil. Where is it produced? It's produced on the vacuum under um, produced in the vacuum under vacuum conditions, or you're going to get the atmospheric residue. Atmospheric residue, remember, it is what we get at the bottom, at the very end of the atmospheric distillation process, since temperature and pressure could no longer distill, or can no longer break those molecules. And what are the major products that actually that are formed, that are produced? Distillates, mainly naphtha and gasoline, from a catalytic cracking process using what type of feed? A VGO and atmospheric residue. And then we have a couple of notes, which means that, catalytic cracking, if you have a catalytic cracking unit, it's more towards gasoline production. And then you produce olefins. Olefins, recall from our petroleum, is one of the components of the crude oil. Crude oil are hydrocarbons, and they have paraffins, olefins, naphthins, and aromatics. That's one of the components. Olefins are used in the petrochemical industry. So really, nothing within this process is wasted. Everything is used towards either feedstock, to be used as a feedstock, or as an end process. We're going to see that naphtha and olefins are both used within the chemical. Likewise, yeah, so mainly naphtha and olefins is going to be used in the petrochemical industry, and the petrochemical industry is an industry of its own, because everything that we have in this world, everything that we touch, everything that we see, it has some sort of a chemical in it. So that's the just how important the connection within the industries and the sectors are. So nothing is wasted. Remember that. Hydrocracking, remember that you're using hydrogen. Again, it's a cracking, so you're using higher feedstock, higher grade feedstock, or higher fractions. You're using VGO and atmospheric residue, but look at the nodes. It's expensive, requires hydrogen, and hydrogen is a very volatile material to handle, so extra caution is actually needed, and it's towards the production of middle distillates. Middle distillates, we're talking about jet, kerosene, gas oil, diesel. Coking. Coke, production of coke. Coke can be, it's a market of its own, and it's used towards the production of light or middle distillates. Light distillate, light fractions will be naphtha and gasoline. Middle distillates will be jet, gas oil, diesel. But it requires a higher temperature. Every process that you do, higher temperature, higher pressure means more investment, more money. Even though it doesn't use a catalyst, however, it requires higher temperature. Catalysts are expensive on its own, so in this process, the coking, you require higher temperature. You can get the feeling that this is a very chemical, technical driven process, because what you're basically doing is to break down crude into molecules, into fractions, smaller fractions, which contain lower molecules, lower and usable molecules that you actually can make a profit or margin, as we tend to say. A refinery needs to make a margin, i.e., the cost of production needs to offset the cost that you spend to purchase or to purchase the crude. Therefore, the products you need to make some margin on the product. And last but not least, you have the thermal cracking and the vis breaking. Thermal cracking is a very useful process towards the production of gasoline, naphtha, and gas oil. Specifically, and you can see the percentage of it. And likewise for vis breaking is a residue that we saw in the previous slide, where vis breaking is applied, and it is good because it has it's the process with the lowest capex. And a disclaimer that we put: in general, the lighter the product, the heavier, the higher the value. Why? Simply on the basis that heavier fractions require more work on them, higher pressure, higher temperature, more chemical processes, more catalysts, therefore more money to be invested on these ones. Moving on to the next slide, there are sets of properties, or we call spec specifications, that your products need to have. And I just want to focus on a couple of light fractions like the gasoline and middle distillates like diesel, as well as the gas oil and fuel oil. Fuel oil is produced, it's a heavy fuel that is actually produced after the atmospheric distillation unit. So that is produced in the vacuum distillation unit, and that is where you're going to have, for instance, your grades of VGO. Fuel oil can be broken down into multiple grades: high sulfur fuel oil, high sulfur VGO, low sulfur VGO. The refinery industry is just unbelievable. It is very broad. And a couple of the most important, I've summarized for you the most important qualities that you actually need to be aware of when it comes to gasoline production, diesel, gas oil, fuel oil, and all in general, basically what you actually need to have. So the octane number is a very well known and much spoken in the industry. Gasoline needs to have the correct octane number for performance purposes, and octane number is related to how quickly it is to ignite the fuel, because ignition, it's what you're going to is what is going to happen in your motor engine, right? So when you feed that type of fuel, gasoline, into your engine, it requires a certain point of ignition for it to ignite, light up the fuel, switch on the engine, and your car is up and running. Diesel, on the other hand, is characterized by its cetane index. So octane number, cetane index, those are also related to ignition, but whereas octane is related to ignition, how fast it is, cetane, it is related to how delayed it is, because in terms of fractions, gasoline is lighter and diesel is actually heavier compared to gasoline. So if you drive a car that is powered by gasoline, and if you drive a car that is powered by diesel, then you will feel the difference. You'll feel the difference because a diesel powered engine is actually heavier. It is associated to this cetane index, which is to do with how slow it is to ignite that combustion in your engine. Then you have a bunch of other properties like the flash point for safety, the density, which is equally important for performance and economic reasons. Density from your crude section, it has an opposite relationship with API. And API, from this chart here, you will be familiar probably from your crude lesson that higher API means light, higher API, lower density. Lower density means lighter crude. And lighter crude, you can see, for example, where the spec for lighter crude starts. So it would be anything above 30. It's pretty much light. But you also have the definition in terms of sweet and sour. And sweet and sour is in terms of sulfur content. Sweet is anything below zero point 0.5 sulfur content or sulfur weight content, and a sour crude is anything above zero point 0.5. But that doesn't mean that crudes like the Dubai, as we saw, is one of the major benchmarks, is not very useful. No, it simply means that you need to have a specific refinery setup, specific refinery complexity to be able to distill, to be able to process that crude. Specifications may vary from place to place and also by reason. Blending, we saw a couple of blending components, and final products on the refinery are produced by blending of various refinery streams. Those are called the intermediate process, product or components. And basically the blending components that we saw, for example, the reformat and the alkylate. Um, a note that I have it here is viscosity does not blend linearly. What that really means is, for a viscous fluid, let's say anything that is about, and viscosity can is measured in centipoise. Does not blend linearly. It simply means that for you to blend a viscous fluid, it's not a ratio of 1 to 1. That is a linear, that would be a linear blending. But for a viscous fluid, it means that the blending component that you use to break the viscosity, let's say that you're using gas oil or ULSD, ultra low sulfur diesel, to blend a higher spec of fuel oil. That happens a lot in Singapore in the bunkering market. You need a lot more gas oil, and gas oil is usually measured, the unit is in dollar per metric ton, so you need to buy a lot more gas oil. You need to use higher volumes of gas oil to be able to break down more viscous fluids, more viscous crude types. Adding low viscosity material makes a big difference, and you have a good example: blending gas oil with residue to meet fuel oil viscosity specification. So that's the example that was just given. And you have multiple associations or multiple entities that are approved by the market. ASTM, I do believe that it stands for American Standard for Testing and Material, and that is a very well-known um, standards to meet product specifications. We spoke before, really, how does a refinery make money? A refinery makes money by maintaining or increasing its margins, and I'll let you go through on your own as well on this slide. But what I really want to emphasize is this point, that a refinery revenue is derived from the margin between purchase cost of crude oil and the sale value of the oil products, less or minus, take away as you wish the costs. We have multiple metrics: the GPW, gross product worth, or as you produce, you're going to have a certain volume of certain weight. Let's call it, you're going to have a certain weight percentage. Let's say for if you measure your crude at 100%, a crude is going to be able to produce a certain percentage of gasoline, certain percentage of diesel, certain percentage of naphtha. Then from this percentage you multiply by the price and you get the GPW. And from the GPW you can calculate your refining margin, and that's basically what a refinery margin is. The types of refinery that we spoke, from the simplest, a topping type of refinery, to the most complex ones, which have basically all the above units, like the VDU, processing for isomerization, reforming, and alkylation. So what does a topping unit do? The configuration is distillation only. It has some HDS, some hydrodesulfurization, but remember it's mainly for the gas components. It's at the very top, and as this graph on the right suggests, the very top, i.e. the name topping, is for the gas. Higher value products, remember from the previous slide, the lighter, in general, lighter products have higher value. So topping, distillation, some HDS. Fine. Lowest barrels per day, and the feedstock requires the feedstock trend is actually the opposite. Why? Because basically this is basically where the highest pressure, and this is where the highest, as soon as you put the crude, this is the very first fraction that is coming off, and it requires the highest feedstock per barrel. And then in terms of product slate value, it has the lowest per barrel. Hydroskimming, distillation, you getting a higher, what you're doing is that you're getting a higher portion from distillation, and you getting a higher HDS as well, and also you have a higher you have higher processes such as reforming. So the more, or the further down you move through this refinery list, the refinery type, you start to realize that the complexity increases, and with the complexity increases, you're going to have the operating cost per capital, you're going to have the volumes of feedstock that is required, higher volume, higher costs, and then the product slate value. Okay, that's the product slate value in terms of complexity, because even though we said that lighter fractions are more valuable, remember what a deep conversion or a high complexity refinery is actually doing is breaking down all those super heavy fractions to produce more gasoline, to produce more gas oil, diesel. And because you're breaking down harder and heavier fractions, therefore the product slate value will increase, as in highest per barrels per day, BPDs. And this is just pretty much a summary of how the capex and the crude costs, and likewise, as we saw here, will actually increase with the type of refinery. And yeah, this summary on this picture on the right, it comes to summarize a couple of the points that we touched in here. Low sulfur products are worth more than the high sulfur. Likewise, products with if you require lower desulfurization, lower demethylation, that is a much straightforward process, and then is going to be more profitable as well. You cannot go without talking about shipping. Shipping is a very important aspect of the refining process, because those clean products, as you can see, we will further break down the refining process, and I'm going to show you a very usable trick that a lot of companies use in the market. It is called so you're transporting clean products and dirty products. The clean products are those ones that are produced through the atmospheric distillation, and the dirty products are those ones that require further breakdown. And that's very important, especially from a trading point of view, as I point out that sometimes for trading purposes you're going to hear GP, or general purpose tankers, or MR, medium range, or LRs, LRs1, LR2, and you also have some LR3, which is in between the LR2 and the VLCC. You can see that there's a difference in tonnage, because the VLCC can the LR2 can really be shortened down to 80 deadweight tons to 120, and from 120 to 160, that is going to be your LR3. Regardless, this is how basically the traders might refer to product tankers in the market, as opposed to crude oil. Crude oil will be yours typical VLCC, Suezmax, Aframax, and Handysize, but mainly the for the crude oil is going to be mainly the VLCC and the Suezmax and the Aframax, whereas the Handy is going to be more for the products. And I have attached as well the major crude oil routes as well as the major dirty products. So have a read on these at your own time and be more familiar in terms of cargo size and the type of crude. ULCC, ultra large crude carrier, very large crude carrier. Suez Max, as the name suggests, is allowed to go through the Suez Canal. That's why you see via Med here, Western Europe via Med. Like for then you have the Aframax, the Panamax, it goes through Panama Canal, because the Panama Canal will have a certain draft that certain ships, as in certain vessels like the Panamax, um, need to have in terms of draft, whether it's shallow or deep, so that that vessel is able to perfectly sail through that canal. The next slide is where I want to get to in terms of clean products. I have attached how the industry tends to break down, and this is what we call the products tree. Get familiar with it, be friends with it, live with it, but that's basically what the market trades or what the market talks about. And every single one of these products they are traded from a granular or from a grade point of view. It's very easy find that you're going to hear in the market that you're trading or you're buying and selling you're producing blending components, but what you're really going to be talking about is this grade. And the more specific you get, the better for the market. This is what the market is looking for. In terms of gasoline, the market is looking either for aviation gasoline, avgas, or the type of gasoline, premium gasoline or regular gasoline. Premium gasoline is anything that is from 91 gasoline all the way to 98 gasoline, and regular gasoline is basically anything below. So regular gasoline is likely the 89 to pretty much 76. You have Reformat, all these are blending components. You have the gasoline, you have GTBE, which is gasoline treated as blend stock, or as it points out here, just gasoline blend stock. And the grades, GTAB, gasoline treated as blend stock, even that has a regular and has a premium. Within the oxygenate, you have ETBE, ethylene tributyl ethyl, MTBE, and same methyl tributyl ethyl, or something along these lines. So there are a lot of granularity when it comes to grades. Gasoline blending components, you have naphtha, and naphtha, I would say, that is even more complicated, because you can break down all these naphtha from a point of view whether it is a catalytic or a natural naphtha or a N plus A naphtha. So so natural plus aromatics, or N plus A means naphthalene plus aromatics type of aromatics, and the specific type of grade 180. Likewise, you're going to see for fuel oil. Fuel oil, you have different types: 180 or 360 being heavy fuel oil, heavy sulfur fuel oil, and 180 low sulfur fuel oil. But within the clean products, that's how we tend to break. I want to also to talk about the dirty petroleum products. The clean petroleum products is also known as CPP, dirty petroleum products DPP, and you also have the NPC, non-petroleum clean. So even though the non-petroleum clean falls mainly under chemicals, but remember, we also have the lubricants. And if we follow all the way back from a refinery point of view, the lubricants are part of the what we put through the vacuum distillation unit. It's the final product that it is hydrotreated after it is fed into a vacuum distillation unit. So all these processes, they run back to the crude distillation unit, CDU, atmospheric distillation, CDU, crude distillation unit, as well as the vacuum distillation unit. Fuel oil, multiple grades of fuel oil, high sulfur, low sulfur, MGO, marine gas, oil. So that can easily be put into the gas oil, diesel, but depending on the specifications, the market might just tell you that MGO, because it's used as a transportation fuel for vessels, MGO then is can be categorized under fuel oil. But just to reemphasize that, you might see MGO, marine gas oil, under gas oil, which would also make sense. And on top of that, you will have the ULSFO blending rules after IMO 2020, IMO Industrial Maritime Organization, which happened in Jan 2020, to make sure that you retrofitted your your vessels with engines that emit lower sulfur emissions, i.e. you need to use ULSFO, or you need to use LNG to power your vessel in order to curb emissions from in order to curb CO2 emissions. Straight run fuel oil, HSS RFO, and there are a couple of light train zones that back when I was working for a shipping for a data providing company, a lot of light train zones were typically doing HSS, RFO, or even HSFO. Singapore, Palapas light train around the light train area around Singapore and Malaysia. You had the Frederikshavn light train around Denmark, that's in Europe, which processes a lot of HSS or even HSVGO. VGO is a higher spec of fuel oil. So that is precisely a note that I put on fuel oil. Only currently there is only significant outlet for HSFO due to the bunker market. Bunker market is the dirtier market, i.e. the fuel oil market, hence the name dirty petroleum products. And then just a couple of notes of what it means for really refiners when it comes to HDS processes, hydrodesulfurization, to make sure that you reduce the sulfur content from the fuel oil, and fuel oil being produced at the vacuum distillation unit. And due to legislations that we mentioned, the IMO, due to for reduction of CO2, the reduction of CO2, reduction of sulfur, really that's the whole purpose of desulfurization of your fuel oil. A couple more notes of what happens in the US, because we will see slightly towards the end where most of the refineries are. And I just want to bring you a little bit uh, towards the next slide and tell you a little bit about Europe. For instance, the gasoline market is a big market in Europe. But then if you analyze, for example, the flows between 2019 and 2020, you will see that in 2019 you had countries like Saudi Arabia, and then in 2020 you had a flow more within the United Kingdom, more within Europe, and that is European CPP exports. And why is that? It's because, can it have anything to do with COVID? Very likely. Remember that in 2019 you saw much larger flows of products in general, whereas in 2020, in the next slide, we're going to see a couple of numbers in terms of millions of barrels. That it decreased in 2020. Why? Because 2020 was the year that a lot of, especially the energy industry, was heavily affected by COVID. Remember that all these fractions of crude, they are used, right? They are used, gasoline and diesel. Gasoline, for instance, is used for automotive industry. during COVID, it was locked down. Nobody was driving anywhere. Therefore, the requirement for gasoline production or the gasoline use was much lower. Likewise for diesel, gas oil, diesel can be used in many parts in the world. In West Africa, for instance, it is still used, diesel for power to power your vehicle, in Europe as well, but because of specifications to carbon emissions from CO2, it's no longer. Therefore, the transition to renewable. Nevertheless, in 2020, all these fractions like gasoline, diesel, and even jet fuel, because jet is used to power your plane. You put kerosene jet in your plane, but because of the aviation industry was heavily affected, and the demand for jet fuel also decreased, and that was a big news everywhere in 2020. All these industries, the manufacturing, you require higher pressures, higher temperature within your manufacturing. You require gas oil, you require diesel, you require a lot of these inputs, for example, for smelting processes in the manufacturing industry. So from this point of view, you can see how this industry is actually flowing, or how the stop and start economy between 2019, 2020, and the recovery and 20 a slow recovery in 2021 is actually affected, or is being affected, by the shortage of fuels, of fractions. So this is basically a couple of numbers that I just wanted to put into perspective. If I can zoom in 2020 compared to 2019, and if we go to totals, I'm going to share this slide. And if we let's focus on gasoline, for example. These are the country destination, these are the countries importing and countries origin. So this is the exporting countries, and into a number of countries, France for instance. And whereas in 2019 we actually saw the United States and we saw Nigeria, in 2020 we are seeing that these flows are much reduced. Let's just look, for example, at total Belgium, 10 million. This is in terms of vessels, the flows of vessels carrying these products from Belgium, for example, to France, from Belgium to Netherlands, based on Thomson Reuters data. I need to disclose these, where this data is coming from, but there are multiple sources that you can actually use. So look at the grand total. That's why I actually put as the COVID impact fell through the grand total differences. Look at the grand total in 2020, 300 million in terms of total for all the products, and look at the total in 2019 when COVID was not felt, 420, and it declined in 2020. And this is in Europe and the US CPP, for example. And I have attached the flow of gasoline that I'm going to let you read at your own time. But the main important point here is that I'm going to highlight is that Europe is a structurally oversupplied market in gasoline, and it needs to export that gasoline to everywhere else in the world. The US, we point out that it's been a major recipient, a major importer of the European gasoline, but because of its shale oil, is starting to develop that self-sufficient in terms of production of gasoline and many other products. In terms of flows, you have gasoline flowing to US and you have diesel flowing the opposite direction. That is exactly why most of the big bars that you see in both in 2019 and 2020 are diesel, because WTI, well, West Intermediate Texas, which is the benchmark from the US, and the Brent from Europe, WTI is mainly used for diesel production. That's why you have a higher portion of diesel, whereas the Brent crude in the UK North Sea benchmark is actually used towards gasoline. That's why the Europe or Europe, let's say led by the UK North Sea benchmark, is a major producer of gasoline. And then you can see other players as well and how they will play an important factor towards that gasoline flow. Right, so that is just the US CPP products. You can read that on your own time. I have attached equally the DPP market in terms of numbers and the breakdown in terms of products and the countries where the product is going to. And then you can see Malaysia, Singapore, and Netherlands. All these areas are areas with light rain zones. Light rain zones, those are areas where a lot of ship to ship transfers occur, and ship to ship transfer is a predominant features of the bunkering market, fuel oil market. COVID control is required for demand recovery, and demand recovery basically from 2021 onwards that we are seeing. But of course, new variants, new strains of COVID keep giving scares of keeping they keep affecting the industry with this new Omicron strain, which, for instance, in the UK in particular, where I live, there is new restrictions in place. The government just recently announced that we're back to the office effectively as of yesterday, the 27th of Jan, but we stayed working from home from November, or from, let's say, from the second half of December, at least for a good a month and a half. So COVID control or vaccinations, through vaccinations, that will be very important. Vaccinations mean that, for instance, you have your COVID passport, you're allowed to board a plane. You're allowed to board a plane means that the aviation industry, you need more jet fuel. More jet fuel will be under increased demand, and so on. And that's basically how this industry works. I just wanted to show a couple of slides on Guyana and the activity. Both we slightly reaching the end, and I just wanted to introduce you to Guyana for you to know what your country is involved in terms of DPP import and crude import or export. And I noticed through the activities in 2020 and 2019, especially 2020, we didn't have much activity in terms of vessel sailing from Guyana, and this is basically what I found. You know, Guyana is a major is an exporter of crude, and it usually exports to Bahamas, to China, and the US, and it's mainly this Lisa crude that he exports. And in terms of fuel oil, you can see the grade. It's a high grade of fuel oil. So I would think that it's a relationship between Trinidad and Tobago and Guyana, but depending on the crude slate. And I would think that Lisa, which is a grade crude, a grade of crude, it's a type of crude that will really be suitable for the production of higher grades of fuel oil. And there is so much more to talk about the refining industry, and we're just scratching the surface here by talking about capacity and utilization rates. And in terms of capacity, you can see where most of the capacity is, and capacity, I have it here, the figures were estimated to be in terms of 98, and this is 98,000 barrels per day. Yes, so that is for thousand, yes. So, and then the scale is US and China. Those are where most of the capacity is, most of the refining capacity is. And then you have Russia. And where are the refineries located? The biggest one is Janmagar, Reliance in India, Venezuela, and all these you need to keep associating to the type of crude. I know that Venezuela, if we refer back to one of the slides, Venezuela, it has a specific crude grade. Venezuela, I do believe that is a heavy grade of crude with its with a heavy slate. So it is suitable, for example, for more complex refineries. And the US and China, they would, depending on the complexity of the refinery, which we can see it here, and how many, you can see that, for instance, in North America, it has 4,000 catalytic reforming units and 143,000 coking. These are the units that will break down the heavy stuff, and that is exactly why they can afford to import crude from Venezuela, for example. Typical market players, read that on your own time. I want you to focus on the refiners. Refiners are structurally short crude and long products. Long story short, short crude means that if you're short of something, it's because you need. Refineries need crude, and you long because you have something. You have products. You need crude to produce products, because at the end of the day, you're going to have products. You buy crude, sell products, lock margin. You're a refinery. Congratulations. WTI, I have attached here, I have attached the scales for WTI and Brent, which are on your left in dollars per barrel, whereas on your right you have dollars per metric tons for London gas oil. We have not even scratched the trading. These are the trading of London gas oil, for example, or RBOB gasoline. They will trade in different exchanges, and exchanges, we are talking about futures. Futures are related to we have different sizes, different delivery dates, different timestamps on them, and we have different lot size, different contract sizes. So that is something that you also need to be aware of. And the price, let's say this is a very short period that goes from only April until June, and you can see that the price of all these commodities, WTI, Brent, and gas oil, they do follow almost the same trend. Likewise for at the bottom for gasoline, unleaded gasoline, and heating oil, which trade in a specific exchange. They are in dollars per gallon, so $580 per metric ton for gas oil, roughly 70 where was in on the 7th of June 2021. The price of Brent was roughly at $72 per barrel, and crude and WTI trades at discount. That is why it's lower, trades at discount from the Brent. So here is just for you to see that there is a trend, positive correlation between prices of these commodities. And need to talk about China and current prices, guys. There is a lot more to it than just what we spoke about. Oil product arbitrage. So increase demand from China. The naphtha and gasoline spreads. You have spreads between those commodities, and spread is basically how the naphtha is going, how the if it is going up and the gasoline comes down. That is basically all we're referring to refinery margins, such as the crack spread 3 to 1. 3 means for every 3 barrels, for every barrel of crude, you can produce 3 gasoline, 2 gas oil, and 1 fuel, for instance. Or you have different multiple refineries crack spreads. And I have just attached, in terms of fundamentals, what really drives, or the fundamental analysis, the key factors, demand and supply, and then you obviously have other factors as well. So if you didn't catch my name at the very beginning, my name is Antonio. Hopefully I said that right at the middle of the presentation, or you have followed the other presentations as well in the crude market and natural gas markets. I'm currently working within the power and gas sector in the UK, but I have experience in the crude oil and product markets after working with a data providing company. So now I'm having an exposure, an overview of the whole energy sector, really talking about power and gas and renewable markets. Really encompasses the whole the industry as a whole. Once again, many thanks to the Georgetown Capital for putting this one together, and I hope you enjoyed. Get in touch with us. Many thanks. Thank you.